start off by saying first, my name is Erik Svendsen. I am a retired certified public accountant, and I wanted to kind of go through some of the stuff I've done. But before I get to that, I want to say this class is how to choose an accountant, but largely also it's how to get the best out of a relationship with not only your accountant, but your entire professional services team. So that's kind of what we're going to start on. I wanted to thank the Pacific County Economic Development Council, first off, as well as the Long Beach Merchants for hosting these talks and giving us the opportunity to do this. Carla Jensen and Diana Knight for their help in putting it together, and the Washington State Micro Enterprise Association for funding these talks. As well, the Peninsula Performing Arts Center is where we're at right now, and Sue and Bill Svendsen are nice enough to host us. And finally, I did want to thank everybody for coming. Thank you in the audience, and thank you on Zoom for being here. I hope you find it worthwhile use of your time. So to start with, I'm going to give an overview of the discussion that we're going to have today. I'm going to start on my background and my experience, kind of where I came from and how I got to where I am now. And specifically, I'm going to talk about the different types of firms and accountants that I've worked with within that my background, to kind of show you the different size firms, because I've worked at a number of different size firms, and they have different strengths, they have different price points, they have different weaknesses, maybe if you, from a certain point of view. So that's one thing I'm going to talk about too, the different types of firms and accountants and how they differ. So I'm going through my background and something to keep in mind, that it is germane to this conversation, not just me reminiscing for a while. And then following that, how to choose an accountant based on your needs, their capabilities, their limitations, those kind of things. And then finally, I do want to spend some time talking about how do you be a quality client? How do you be a partner to your accountant, in that you guys can together create the best result for you, whatever that result you might be trying to do is. And we're also going to talk about that, as well as what it is you need from an accountant. Because very often people say, I need an accountant, like saying, I need a dentist. You know, dentists, do you need a cleaning? Do you need a root canal? Do you need a filling? Do you need, so there's a lot of things that fall under this umbrella of I need an accountant. So we're going to talk about that a little bit more. And then finally, we are going to do we are going to have a little time for some question and answers. If you have questions as we go, I'm happy to answer those. If you need to let us know on Zoom, or if someone has a question here in our audience here, just put your hand up. The only thing I would ask is, if you do have a question, try to keep it to germane to what we're discussing at the moment, rather than something that occurred to you from something I've said before. There will be time at the end, so I want to make sure we don't get too far off on digressions as we go. So before I start, I like to start with a joke. It's not really a joke. It's just something that they told us when we first started in the accounting program at school, was that, it's not really a joke, it's more of a truism, is that accountants really wanted to be in the game, right? Accountants wanted to be players in the game, but they were relegated to scorekeepers. And so in turn, what they did is they made keeping scores so hard that they're the only ones that can keep score. So that's the sort of genesis of the accounting profession. So my background, as far as accounting goes, is I graduated from Central Washington Universii in Ellensburg, Washington in 1998 with a bachelor's degree in accounting. My work experience, my first job out of school, and like I said, keep in mind, this is kind of be sort of the basis of discussion of the different types of firms that are available out there and the different type of accountants that are available. My first firm out of school was a firm called Hoffman, Stewart and Schmidt. That was what I would consider to be a large-ish single office firm, right? And so that was my first job out of school. Now, when you're in college, college teaches you the theory of accounting. College teaches you the background of accounting, the history of accounting. Firms actually teach you how to do the work. And you'll hear the same thing from lawyers, you know. they teach you theory in school. When you get to a firm, the firms are actually teach you how to do the job. And Hoffman, Stewart, and Schmidt for me was a great place to start because it was a firm with a very deep knowledge base. There we had, I believe, 5 partners when I was there. The whole entire firm itself was about 35 people. So there's a really nice knowledge base there to draw from. At that firm, the main thing I learned from them was work paper setup, some initial thoughts on how to deal with clients. And the biggest thing that I learned from Hoffman, Stewart, and Schmidt was precision. They were absolute sticklers about precision. All your work papers were precise. All your work papers are formatted the exact same way. And I still use that formatting today. All my Excel spreadsheets have a 2 measurement space between the cells. Everything has a 6 space measurement underneath, underlines, those kind of things. So all those work paper thoughts that I learned back in 1998, I still use today. There's an example I like to tell of Hoffman, Stewart, and Schmidt of how obsessed they were with precision in work papers. And so one of the things that we have, and those of you who have ever looked at your business tax return, be that a 1120, it's a 4-page return, and the 4th page of that return is basically a reproduction of the balance sheet of your income of your financial statement. So there's a balance sheet, and then what there is at the bottom of that is something called an M1 reconciliation. M1 reconciliation, especially when you're a taxable entity, so a C corporation, is it reconciles book income to tax income, and you'll have differences in those. You'll have things like 263A adjustments. So you have deductions and add backs for tax purposes that don't affect book purposes, right? So like if you're a cash basis taxpayer, but you accrue accounts payable, you might have noticed at the end of the year that your accountant's going to add back some of those things, are going to add back receivables or deduct receivables that you've shown as income and add back expenses that you haven't yet paid cash for. Those go under what are called an M1 reconciliation. And again, we're reconciling book income to tax income. So that's the background of this, right? We had a work paper that was supposed to duplicate that. And what you should have then is you should have this work paper that came down to all the taxable brackets, and it should match at the end of that work paper exactly the tax that is shown on the face of the tax return, how much they have to pay. That's the way the work paper is set up. And I had this one client I was working on, a large construction client, right? So they had a lot of different add backs because they had a manufacturing arm too. So they had a lot of different add backs, a lot of different book tax differences. So within that, then I did this work paper and I had it so it matched to the rounded dollar the tax on the tax return itself. So my work papers were just perfect, exactly the way the partners wanted to see them. The junior partner who reviewed it before it got to the final partner for a final review and signing made one change. And this changed my tax by about, I want to say maybe $150. So not an immaterial amount, it was an actual amount. And so we changed it, did the work papers change through, made the change. It was an easy change, hit print, sent it off. What I had forgotten is that I had actually been off by $1 on my tax versus my book, on my tax income or the tax on the tax return versus the tax on the work paper. So I went through it because there was only $1 difference, and I just changed the tax return. I forced a tax number into it. It was supposed to be like, 55,007, and I made it 55,006, let's say, for the taxable amount. Well, after that change, then that should have changed the taxable amount, but it didn't because I'd overridden the taxable amount. And so when it got to the final partner, he just happened to notice, hey, your taxable income changed, but your tax itself didn't change. How does that happen? Oh, well, I overrode the tax because I wanted it to match my work paper, and it did, but it turned out that the tax was wrong because it wasn't being calculated anymore by the software. It was overridden by me, and I forgot that after changing that taxable income, I needed to change that override. So it was a good lesson both in precision, and then also when precision can somewhat get you in trouble if you don't remember you were trying to be that precise. So that's what I learned from Hoffman, Stewart, and Schmidt, in addition to just kind of getting my feet wet in the industry, I worked for them for about 2 years. I also want to say that they specialized in two main areas. They specialized in not-for-profit accounting, and they specialized in construction. And the great thing about being at that firm, and it's really one of those kind of serendipitous things that happens, is those are two of the, what would you call it? Two industries that have a lot of specialization in them. So they have a lot of intricate parts that only relate to construction and only relate to not-for-profit entities. And Hoffman Stewart Schmidt was large enough that we did quite a bit of what we call attestation services, compilation reviews, and I'll talk more about those later. But it gave me an insight into what it actually means to say, what are the nuanced characteristics that only affect these industries. And that's really important as we go through with accounting, because there is a lot like that, because just the nature of the tax code and the way things are promulgated. After leaving Hoffman, Stewart, and Schmidt, I worked with an accountant named Mike Amspacher. He was a single office firm in Vancouver, Washington. And I was there with him for a couple of years, and then I ended up buying into his firm. And by the time I left, it was Amspacher and Svendsen. I worked with him for about 5 years. And it was a real difference going from a large multi-partner firm to a tiny single office firm. The biggest difference for me was the knowledge base, especially only being out of school for 2 years. I like to think of myself as a quick study, but at the same time, there's things that you just have to know, and it takes an accumulation of experience to learn these things. So no matter how quick a study you are and how much you can see these things, if you don't know it, you don't know it. And there is a lot of accounting and what we call unknown ignorance. You don't know what you don't know. And that happens a lot. So that was one of the weaknesses that I felt in a smaller office firm, is it does limit the knowledge base that can be drawn from. But what I did learn at Amspacher and Svendsen was a client focus, a consultation focus, because at Hoffman, Stewart, and Schmidt, we had audit clients, and audit clients we are preparing financial statements for uses other than tax returns. We're preparing them for banks. We're preparing them for regulatory needs. Non-for-profit, especially if you have federal funds, or if you expend a certain amount of federal funds and grants, you have to have what's called an A133 yellow book audit. Hyper specialized. And because they're hyper specialized, you can charge a lot of money for them, because not many people do these A133 single book, yellow book audits, right? It's not that common, because federal funds they're thrown around, but it's a pretty high level that you have to get to expending them. So typically it's things like, CODA, comprehensive options for drug abusers, methadone clinics, large federally funded programs like that expend that much federal funds. So you have this opportunity to charge very high fees for these things. But when you get into a smaller office, you're mostly doing tax returns and maybe some minor compilation or write-up work for bookkeeping work, payroll work, maybe a comp, maybe a review. And so you end up leaning more on the consulting side. Okay, consulting, I mean, not just taking historical information and slapping it on a tax return or slapping it on a financial statement. I want to be very, very clear. That is by and large what tax preparers do. All right, they're going to go through and they're going to check your numbers and see if anything looks totally out of whack, and hopefully they know you and your business, and they can say, well, these are why I know this person gets sideways sometimes. But probably going to touch on this later, but I do think it's worth saying is that accounting is a backwards looking industry, right? It's a historic industry. We are recording things that happened in the past, right? There's not much in it talking about what's happening right this moment, and even less in it talking about what's happening a year from now. So when you're going to talk to an accountant, it's something to keep in your back of your mind, is this is a profession who is focused on recording events in the past. And if you want something different from an accountant than recording events in the past, you're going to have to let them know. And you're going to have to let them know that there's a different type of relationship that you want with them. So consulting, because it's a good money generator for the firms, they really try to push some of these consulting ideas. I'm talking about consulting, things like key performance indicators. What can you look at in real time to see if your business is performing the way you want it to be? We can talk about one of the big ones we talk about is exit strategies. We'll talk about this later. You've built a business. Maybe you don't want to work on it till you die. Maybe you'd like to make some money on it and go do something else. So these are things that I learned at Amspacher and Svendsen because I was also in a different position. They did this at Hoffman, Stewart, and Schmidt, but they're not going to let some kid straight out of school work on it very much. This is stuff that comes with a little bit higher knowledge, a little bit higher background of clients and business and accounting and all these things. There's just a certain groundswell of information you have to make yourself really valuable to a client. So being an asset to a client rather than a necessary evil, I think was something that I learned at Amspacher and Svendsen, or at least I started to get my head around. And then after about 5 years, I went to a firm called Moss Adams, LLP, in Vancouver, Washington. And this is a large regional firm. When I was there, I was there from 2005 to 2007. And at Moss Adams, I think we had 17, 20 offices, although they were always in flux. They were closing them, they were rolling them up, they were opening new ones. What I say about Moss Adams is not a job that I could have gotten straight out of college. I did well in college. I graduated with honors, but I went to a college, and especially in a business and accounting program, that was very easy to get to. There's not a lot of barriers of entry to get into Central Washington University, and there's probably less barriers to entry to get into their accounting program. Moss Adams has the kind of reputation in the stroke where they're pulling from University of Oregon, University of Washington, Lewis and Clark, Gonzaga. They're pulling from high name schools with high barriers to entry, top candidates, that resumes really pop. Now I could do the work. I could do the work very well, but I didn't have the cachet out of school to get into a Moss Adams. But once I worked for a while, and once I learned how to interview, and once I learned my knowledge, I knew what to do, then I could get into a Moss Adams. So it's really one of those things that I sort of pride's the right word, but I sort of pat myself on the back that I was able to get a job there. And what I learned at Moss Adams is what really not account, I don't want to say what accounting can be, what it can really mean to be a true financial professional, what it means to be an absolute asset to your client, to deliver outstanding customer service, client service. And it takes a firm the size of Moss Adams to allow people to hyper specialize. So for instance, I don't want to get ahead of myself, but where Moss Adams specialized specifically was manufacturing and distribution, high wealth individuals, estates and trusts, and public utilities. At least the office I was in the Vancouver office, and right about the time I left, they merged that into the Portland office of Moss Adams. And just so we know what size of firm we're talking about, when they merged the Vancouver office into the Portland office, Moss Adams was the biggest accounting firm in Portland, bigger than Deloitte and Touche's office, bigger than KPMG's office, bigger than Ernst & Young, the big four. Moss Adams was 2 full floors at Fox Tower in Portland. This is a massive firm with massive resources. They're based out of Seattle, Washington. So for instance, I worked on, and the other thing about Moss Adams you have to recognize, and this is important too, as you're thinking about what kind of accounting firm you might want for yourself. When you work for a Moss Adams, you don't do everything. You're either an auditor or you're a tax person, right? There's audit and there's tax. Tax is called the dark side because everybody wants to be an auditor because audit's flashy. And when I say audit, most people immediately think IRS audit. It's not what I'm talking about, and I'll get to that later. But just understand that you can talk to an accountant and say, hey, what's this tax question? And they're going to look at you with a blank look and say, I have no idea about tax. somebody at the firm does my taxes. You can work for an accounting firm and have really not much knowledge of taxation. And that's important. It's especially important when you start looking at what you might want. But the key is, when I was working on public utilities, for instance, I had this one, I can't even remember the tax calculation. It was it wasn't tax. It was like just some big reporting thing you had to run through. And it's just this massive, 10-page spreadsheet. And the only person who could review it was in San Diego. And he charged us in $2007, I believe it was $400 an hour to look at and review my work. So when you have hyper specialization, you also have very high fees. All right. And that's something to keep in mind too. The more specialized, the higher the fees. But at Moss Adams, when I talk about outstanding customer service, there is one, there is one name, and if he heard this, I'd be more than happy to have him here. And his name is Art Miles. And Art Miles was one of the best accountants I've ever met. He wasn't technically all that great. I mean, he forgot a lot. He was like one of these guys that kind of head in the clouds, he had this sort of philosopher sort of bent, but he was the 17th partner admitted to Moss Adams. And this is, a firm with hundreds of partners. He's been on their executive committee, been there forever. And he's the one that really taught me what it means to be a true professional, how to truly come alongside. He always say, you have to come alongside a client, right? You have to meet them where they're at. And then once you're alongside them, you can take them. And one of the best examples I can give of this is at North Jetty, we had a bar pilot come in and talk to us, an old family friend. And he came in, and it's one of the things the bar pilots do. The bar pilots don't touch the controls of the boat, right? They don't drive the boat. They don't touch the wheels. They don't touch the throttles. They get on the boat, the ship out beyond the bar, and they say, is there anything I need to know about this ship? How's the engine? How's the rudder? How are we looking? All these kind of things. And then they give advice to the person coming across the bar and how they might want to drive the boat. They know the tides, they know the bottom of the river, these kind of things, but they're not driving the boat. They come alongside the boat, figuratively and actually got on the boat, and they stand there and say, well, let's do this, do this, do this, do this. And the boat gets through. And this was the idea that Art Miles had was, it doesn't take, typically, it doesn't take a hatchet, it takes a scalpel. These are little things little tweaks we can do, little things we can do quickly to make a client really get where we need them to go. One of the things I worked on in Moss Adams, and I was there for 2 years, and this took up about 6 months of my time there, was we had the owner of a very large soda distributorship around Vancouver, who was diagnosed with small cell melanoma and was given 6 months to live. And this is the main owner, the president, the main operations person of a company that brought in tens of millions of dollars a year. This is a major enterprise. Not only that, it's a major family foundation. It's a major, when you have a company that size, it's not just the operating business. There's the LLCs that own the property. There's the pension plans. There's all the spin-off entities. There's the different things, there's the whole family that have ownership in this. And what we realized at that moment is we had 6 months to get the estate in order, to get the gift taxing in order, to get all these things in order, so that when he passed away, and passed away he did, he died 5 months later, it did not bankrupt the company. It did not destroy the family. It did not really, in that business operations, put too much of a blip on it at all. And I'm not saying all of that was because of Moss Adams and Art Miles. I don't want to say that. They have a very good company and they have very good leadership in place. But what we did is we saved them all the money they would have spent on the estate tax and the gift taxes. We got things set up so that when he did die, they could get the best tax result possible based on his passing away. Right. So one of the things I learned at Moss Adams was, really, truly in business, nothing good usually happens by accident, right? You have to have plans for these things, because when things go wrong, and go wrong they will, we saw that a few years ago, you have to kind of have this understanding of things need to be in place. They need to be where they need to be, and they need to be in their buckets, or else bad things can happen. But, big but, Moss Adams, about the time I was leaving, started what they called their West Coast Initiative, okay? The West Coast Initiative says we will take on no new client that we can't get $30,000 in annual fees from, right? $30,000 in annual fees, pretty hard to come by in just a tax return. Right? That's a big tax return. I'm not saying we didn't have them. I like this one story too. We had a software manufacturer. They manufactured and distributed software, and for some reason their operating entity was an S corporation. Now, I'm not going to go into the specifics, but an S corporation is a pass-through entity where the income from the organization, the business, is transferred over to the personal tax return via a schedule called a K-1, and then it's reported on your individual tax return as an owner. The catch to that is that the owners then have to file everywhere the business has to file, okay? So this was a company with, I think they had 15 owners that did business in every single state in the nation. And not only in the state, in almost every county in the nation. Everywhere there was a bookstore that sold software, their product was in there, right? So we're filing returns for, like, the city of Mobile, Alabama. Because it's not just states, there's localities, there's cities, they have their own income tax returns. So the government copy, which is the smallest copy of the tax return, when I printed that whole thing one time, was 1,900 pages. Mostly because of all the Schedule K-1s for all the owners and all the time. So very, very complex. So maybe that tax return rises to it, but that's one again where that company shouldn't have been an S corporation. And if you can start out with an accountant and you can start out with someone's, hey, this is the mess of the thing I'm going to make. Should I be an S corporation? They say, no, absolutely not. Be a C corporation, because then the company has to file, but the owners don't have to touch those states, right? So those are the three firms that I worked for straight out of school. And those took up 9 years of my life, let's say. All right. So we get to 2007. And in 2007, I was on this sort of partner track. You got this fire, everything's become partner. You want to make partner, because once you're partner, well, I don't know. You don't have an expectation what's going to happen. You think something great's going to happen when you make partner. All of a sudden, the gates are going to open up and angels are going to sing hymns and all this. That's what you're taught, is that you want to make partner, because to make partner, you work 60, 70-hour weeks. You're working all the time. Your life is your work. And this is, especially back in the early 2000s, this was the ethos of accounting firms. Now, I don't think it would fly today. I think today we're a lot more interested in work-life balance. And they gave a little lip service to it back then, but they didn't mean it. Now they think they mean it, and I'm sure those things have changed, those kind of boiler room sort of things. But life provided me with an opportunity to overcome difficulties at that time. And one of the side effects of that is it absolutely took out of me the desire to work 70 hours a week. And it kind of took away the interest in being a partner at a firm where I would have to continue to work 70 hours a week. I decided that public accounting probably wasn't for me long term, even though it was fantastic as far as learning that. And I moved on to other things. It's a great firm, would have been a great career, but it's the path not taken. So the path I did take is then I moved on to my first job in private industry, as opposed to public accounting, where you're working for other businesses. And that was the chief financial officer at a trucking company called Olson Trucking. Vancouver, Washington, we had a fleet of about 100 trucks, split between off-road and highway. And that gave me my very first view, other than through the lenses of clients, of what it looks like on the other side of the desk. And I found very quickly that what I had grown to believe matters to owners of companies and businesses and small businesses really doesn't matter to them that much. I was upset because you're obsessed with getting numbers in the right boxes. You're obsessed with making sure things foot. When we say foot, that means they add up. That's what we call adding up. Did you foot that column of numbers? That's what we're concerned about, making sure that those numbers are right. Where those numbers came from, really didn't care that much about, because again, this is backward looking. Accounting is a historical endeavor. You're taking results and you're reporting them to somebody, right? But what I found quickly, and I'd started seeing it at Moss Adams, but it came home a lot at Joel Olson, was that that's not what business owners are concerned about. Business owners are concerned about, am I able to pay my employees? Do I have work to do tomorrow? Do I have things for my employees to do tomorrow? Am I able to pay my bills? There's a piece of property. Am I able to buy it? These kind of things. So this was my first kind of my first introduction to being on this other side of a business. I was there for about 2 years, and it was actually it was a pretty fun job. It's very different than I had done before. And they had cool trucks. If you're in our area and if you're ever driving down the road and you see a big red truck and it says Joel Olson, you'll see there's some of the prettiest trucks you'll ever see on the road. They are gorgeous. So that was fun. You know, a little kid, and you had the Tonka trucks growing up, and now you get to ride around in these big things. But then it's kind of like the mob. They say just when you think they're out, they pull you back in. And after Joel Olson, I ended up going back into public accounting. At that point, my wife, Michelle, and I had moved to Long Beach, Washington, Seaview, Washington, and I got a job in Astoria working for a company called WWC Business Solutions. Now, so basically for the last 7 years, or excuse me, the last 4 years, I had worked with very large companies. I had worked with high wealth people. I had worked with multinational firms. I'd worked with Moss Adams clients, and Joel Olson Trucking, as far as being a small business, was a very big small business. They were a large concern. WWC then brought me back to a client base that is, and I'm going to be fully honest here, is less financially savvy. Typically smaller businesses with smaller resources. They don't have the ability to hire people, hire internal controllers and internal accountants that kind of keep them on the straight and narrow. So it reminded me that there's a lot of people that need these services, but they're not necessarily as savvy. And it kind of brought me back to back to that customer services, where it's not just as much as coming alongside, it's a little more hand-holding. It's a little more, this is really what we need to do. And I think more of the consulting, when I say consulting, that we're probably talking about here today. I did that for about 2 years. And then after that, my wife and I opened North Jetty Brewing in Seaview, Washington. And I've been running that now for over 10 years. It's our 9th year anniversary being open now, is coming up in April. And that was my experience, and to really see what matters to an owner. What I saw, what mattered to me, what mattered to me in accounting. And I realized really quickly that accountants and their clients have very different focuses. They have very different needs for information. They have very different results that they're aiming for. And there needs to be an understanding and communication between the two parties in that relationship of what exactly it is that they're trying to accomplish. And that's something that North Jetty has taught me, is that there is a disconnect there. And I think that's why it's germane to this class to kind of talk about this background. So that kind of brings me to the end of how then I arrived on this stage today. 25 years, all of it has been spent in the financial arena. My job, if someone asks me what I do now, it's I'm a brewery owner, but I'm an accountant. That's what I do for North Jetty Brewing. I run the finances, I run the operations, I do our inventory costing, because again, North Jetty Brewing is a brewery, so it's a manufacturing entity. It's a tap room, so it's a retail entity. We sell to distributors, so it's a wholesaling entity. And all these things have different complexities within them and different things that you need to know. So the biggest thing as I was going through this class to say what people need to know is, like, to know what you need from an accountant, you need to know what you need. You need to know what you want. You need to know why you're going to accountant. Because again, if someone walks in there and says, hey, if someone, when I was an accountant, walked in and said, hey, I need you to do a tax return to me, I'd be like, all right, great. Give me your numbers. I'll slap them on a tax return. We'll send it off. Done deal. You know, here's your bill. That's the job. And unless you tell them specifically different, again, backward, historically based, they're not going to know, well, no, I really want to know about how do I improve my cash flow? How can I make it so that I don't have this cash crunch on the 25th of the month, and I'm trying to hit my line of credit every time to pay my employees, and then I just feel like I'm working to pay back my line of credit. How can I improve these things to make my businesses run better? And if you don't tell someone that that's what you want, it's hard for them to come up with that on their own, because it's not historically what accountants do. All right. So what do you need? Are you an individual? Do you need an individual tax return? All right, that's one thing. And I'm going to kind of combine this a little bit with if you need that, who might best provide that for you? So you need an individual tax work, right? So typically when you need individual tax work and you have a W-2 and you've got an investment account maybe, and you own a house, so maybe you get a 1098 with your mortgage interest and your property taxes. If that's what you have, you don't need Moss Adams, right? You need either something like, if you're simple enough, with all you had a W-2, you need tax cut online, you know, H&R Block online, do it for free. You know, I do my daughter's taxes for free. They don't even charge you. Hit print, you know, or something like an H&R Block, one of those sort of brick and mortar businesses that are open just for the tax season, and they prepare individual taxes, right? But I'm guessing that if you're listening to this, you probably need a little bit more than that. You're probably saying, well, I have a small business, you know. If I don't have a small business, I have a couple rental properties, and I'd like to maybe get a few more rental properties, and I want to know, am I operating these things the best way I could? I own these personally. Should I have them in an LLC? See, that's a consulting question, right? And that's different than a historical accounting tax preparation question. In those cases, when you need business taxation, what I call write-up work. Write-up work is the accountant does your bookkeeping for you, accountant does payroll for you, those kind of things. That's write-up work. Or you need business taxation, right? Now, in that instance, you're probably going to be best off looking at something like the firm I work for, Amspacher Svendsen, when it was myself and Mike Amspacher working, because we could really do some good services for small business clients. We had good knowledge, we had good product, we had between him and I, we could really pump out some good work, and we had, because again, we're smaller firms, so we're drumming up money, we could do that payroll. We did bookkeeping for customers and those kind of things. We would prepare excise tax returns and that kind of thing. And this is not something typically you're going to find larger firms doing, just because they don't have the time, they don't want to. It's not high enough fee kind of work to make sense for a Moss Adams to do. All right. Then we come to what we call attestation services. And this is one of the ones I was talking about early. People, when they say, I need an accountant, you talk about what you need. They say, do you need an accountant because you need a tax return filed? Or do you need an accountant because the bank has said, hey, your line of credit's up at $500,000. We need to have a review. Okay. And then your second thought is, what's a review? What is a review? And again, I don't want to get bogged down too much into things you don't want to know, but I do think that it's necessary to understand that there are two main tranches of information that inform the way financial information is presented. All right. One is Congress and the IRS. Congress makes tax law. The Internal Revenue Service, Department of Treasury, interprets what Congress said and promulgates advice based on what Congress said we wanted, how taxes should run, right? And if there's conflicts between the taxpayer and the IRS, who is the government, then those are decided by the courts, right? So when you have tax law, you have Congress, IRS interpretation, case law, right? That all relates to nothing but taxation. Nothing but how much money did you make? And based on how much money you made, how much money do you have to send to the government for the privilege of being a citizen of these United States, right? That's the tax code. The other code is promulgated by what we call the FASB, the Financial Accounting Standards Board. Financial Accounting Standards Board, okay? Financial Accounting Standards Board is a governmental agency that's appointed to promulgate what are called generally accepted accounting principles. This is GAAP. Now, when we're talking about generally accepted accounting principles in the FASB, we are talking about financial statements for banks, financial statements for investors, for users other than the Internal Revenue Service, right? And so what that typically is when I was talking about this governmental, this A133 Yellow Book audit, that's a financial statement the government requires to be seen to say an accountant, a CPA specifically, because again, when you're doing tax, I haven't talked about this yet, but when you're doing tax preparation, to sign a tax return, you do not need to be a certified public accountant. You can be an enrolled agent, right? You can be a certified tax preparer. You have to have some kind of, you have to have taken something that gives you a certification to say, I have the ability and I have the knowledge to sign this tax return, but you certainly don't need to have the number of credit hours from a 4-year university and pass the CPA exam to do that. Because all that education, all that studying for the CPA exam, all these things the firm needs to put into you to make you a CPA, again, costs money. So if what you need is a simple individual tax return, you do not need a CPA. And I want to make that very, very clear. But if what you need is a financial statement, when I say financial, there's 3 levels. There are compilations, reviews, and a full audit. Right? Those are the 3 levels of what we call attestation services. And when I talked about Moss Adams, and I said there are people that look at you blankly if you ask them what the standard deduction is for tax purposes, it's because they don't do tax. They're auditors. They do attestation services. So this is the bank says you need a review. Now, what's a review? A review, so you got a compilation. Let's start with a compilation. Compilation is a balance sheet, an income statement. I think that's it. I think those are the only 2 things you need in a compilation, and a letter from an accountant signed by a CPA that said, hey, we took the client's number, we put them on a piece of paper. There you go. We don't attest to them at all. We don't say that they're right. We don't say that they're accurate. We don't say that they're correct. We don't say that they, at a basis, basically we're saying, we don't even say it seems reasonable. We don't say anything. We say, here's the client's numbers. We put it in a format that looks nice. That's what a compilation is, but banks require them at certain levels, right? The next step above that is what's called a reviewed financial statement. And a reviewed financial statement also has to include a reconciliation of shareholders' equity. It has to include a statement of cash flows. It has to include notes to the financial statements, and notes to the financial statements are, again, promulgated by the Financial Accounting Standards Board, because what they have to say is every financial statement has to look the same. If anybody has investments and you've ever gotten a perspective on, some kind of investment, typically you're going to see financial statements. If you're a shareholder of, let's say, you have stock in Xerox or whatever, one of the things they're going to send you as a shareholder is their annual financial statement. And if you look on it, you're going to see the letter that says, the audit, and you're going to see the statements themselves. And then you're going to see all these notes, and all these notes are like, when are the loans due? What was depreciation kind of broken down by amortization, that kind of thing. Do we have bank deposits in excess of FDIC limits? Do we have overdrafts? Those kind of things. So there's all these things that are required. Again, it's not guesswork. Financial Accounting Standards Board, it tells us exactly what need to be in there. On a review, it needs all those statements, but a review says we don't see anything materially wrong with this. Right? It looks pretty close to us. We've done certain little procedures, and we've tested some numbers. We've sent out some. If we saw it's large receivable, we'll send a letter out to the person that owes our client money and says, hey, if they don't owe you that, if you don't owe them this money, let us know. Right. And then we say it, and that's a review. And we say it appears to us that it looks about right. It's not the exact wording. The exact wording is, again, promulgated by the Financial Accounting Standards Board, exactly what that letter says. So that's a review. And when you start getting into reviews, that's where you need bigger firms, because that starts to be a lot more specialized to be able to generate those notes. When I started with Amspacher, he had review clients, and it was really kind of a detriment, I think, because he was more of a tax guy, but coming where I did, I was able to help with that. So that was a good kind of synergy there. Final one's an audit, right? And so if you need an audit is a full-blown audit. Audits are, if you're a publicly traded company, you need a full audit. And a full audit says, an accountant basically takes every single number a business gives him and says, we guarantee that these numbers are materially accurate under generally accepted accounting principles, right? And if you think of what it takes to take Nike and say, as an accounting firm, I'm saying 100% staking my reputation, my license, my insurance on the line to say these are materially accurate. You can rely on them. And that's what an audit is, right? Nonprofit agencies typically are the only ones, you only really do an audit for a for-profit company if it's big, if it's publicly traded, if it's a massive organization, if they got over $10 million in lines of credit and those kind of things. Typically, if you do audit on any small firm, it's going to be not-for-profit agencies, because it's a lot of the funding, the agencies that fund those not-for-profits require them by reporting standards. So those are attestation services, and when you need attestation services, that's when you're going to have to start looking beyond even, you know, a couple partner firm. You're gonna have to really start looking at a firm more like a Hoffman Stewart Schmidt, something where you got multiple partners, where you got multiple knowledge base, because it's not just a partner, you have staff. You have to have 3 or 4 accountants working on one of these reviews for probably a few weeks. So there's a lot that goes on with these things. Other services you can get is general consulting work. You know, this is what I think, and this I think gets at the heart of this question of how do I pick an accountant? Because if what you need is a tax return, it doesn't matter how you pick an accountant. Pick one, you know, say, can you do a tax return? Yeah, sure. You know, and if they can, you know, if they're in business and they're an accountant and they seem like they're doing, they could probably do your tax return and do it very well. But if you need consulting, and again, we're talking about this business arena, that's where you're going to have to start looking at these either very, very knowledgeable single office firms, or start getting up into these larger firms and maybe even multi-office firms, especially if you're doing work in multiple areas. In multiple areas, I mean multiple geographic areas, because there are, as we know, we have 50 individual fiefdoms within the United States, and each one has their own take on things. And it takes a lot of knowledge to be able to keep up with that. And it's really one of the things that scared me about that big S Corp return I was talking about, because I'm doing a return for whatever county Dallas is in, Dallas County. It's like, is it right? I don't know. I'm looking at the instructions. It seems right. All the numbers seem to be coming out where they're supposed to be. But at the end of the day, I'm not an expert in Dallas County, Texas. So that's where it starts getting a little kind of hairy that way. Other things you might go to an accountant for is estate and gift tax work, like I talked about with my soda pop distributor, right? When you start getting into high wealth, you start getting into very big estates. We start talking about gifting strategies. When you have a lot of money in your estate, you don't want to die with a lot of money in your estate, because the estate tax is a very, very punitive tax. It's a very high tax, like 55. I don't know what it is now. I've been out of the game for a while, but it's a big number, right? And so we have gift tax exemptions. You can gift certain amounts per year. So a lot of clients, what we set up, especially these large generational clients, is we have gifting going on every year. They're gifting the maximum can they have, because it's usually like, you know, grandma and grandpa started the business, and then, you know, mom and dad run the business, and now you got you and your brothers and sisters and 46 cousins that are all kind of involved in this business now. And so what grandma and grandpa and mom and dad are doing is they're trying to gift out shares of these companies, shares of these real estate holding LLCs, to get rid of it, to get it out of their estate. It's not uncommon, especially in family farms, and I've seen it happen to a very good friend of mine. His father died. Everything was in his name because he inherited it from his father. years and years ago, had to sell the entire farm after he died just to pay the estate tax. Right? So estate tax, gift tax is something that if you're a high wealth individual and it's going to start affecting you, it can bankrupt your family if you don't approach this the right way and you don't approach this generationally. It's a big key on there. And hopefully if you start getting up to those rarefied levels of wealth, you know it, and you already have a team in place. All right, so again, financial planning is another one that accountants do. There's accountants that offer investments. They offer deferred compensation plans, defined benefit plans, those kind of things. And there's some accountants that are very good at it. It's one of their areas of practice. When I talk to you, when you're a single office accountant, you're a single person, you got so-and-so CPA up there, you need to generate the fees wherever you can. So a lot of times what they'll do is, because it's similar, they're going to this financial planning, helping with investments and this kind of thing. And I think that there's some that are very good at it, but it's also something to say, when you generalize, sometimes you do everything pretty well rather than doing some one thing real well. So it is something to consider as you're looking at that. Audit representation, right? This is a good one. This is something too, and there's always, the IRS is very good at sending these letters that have a very certain look to them that says, hey, basically the end result is you're getting audited. You're getting audited. We're going to show up at this day and we are going to audit your finances. We're going to do all this stuff and we're going to tear your life apart. Department of Revenue will do this. So anybody who's going to come in, and this is always typically going to be a taxing authority or some agency that has authority over how you operate and report things. And it terrifies clients. They're scared to death that they're doing something wrong. The IRS is going to catch them, and then they're going to lose their business and their kids are going to be destitute and they won't go to school. And horrible things are going to happen. If you find yourself, and this is one of my takeaways here, if you find yourself with a letter from the Department of Revenue, from the IRS, that says you're being audited and you don't have an accountant, get an accountant. And by accountant, I mean, get a CPA in a firm that has some wherewithal to be able to handle this kind of work, because you need representation when you're being audited, especially if you're being business audited, right? If you're an individual being audited and you have a W-2, who cares? These are the numbers. But if you start getting into things like I have, multiple rental properties, and I don't understand necessarily what it means to have passive losses, and maybe I've sold them, and now I have exchanges of properties with passive built-in losses. These are things that the IRS can pick apart, and they can make your life hard, and you need someone who knows what they're doing on your side. So your accountant needs to have a durable power of attorney that says, you don't talk to my client, you talk to me, and I will talk to my client for you, because you never want a client talking to the IRS. They say too much. We say they just babble. They just start saying everything, right? It's like it's always that common one that the lawyers use. Do you know what time it is? Yes. End of question, right? And asked and answered. But what clients do, you know what time it is? Well, it's about 7 to 12, but 3 minutes ago is 10 till. So I guess if you're thinking holistic, it's a little bit before 12. And so, and they start explaining exactly what time it is. And so you have to say, that wasn't the question. The question is, do you know what time it is? Right? Don't explain to me what time it is. But that clients are bad at. So always get representation, because if the IRS says, well, what happened with this $50,000? It said it was bought for new equipment, but we strolled through here and we didn't see any new equipment on the floor that looked new. What happened there? As an accountant, as a CPA, I could say, I don't know. Let me ask the client. We'll ask them what they think and we'll get back to you. Client can't say, I don't know. Client better have a reason. And clients also think, and this isn't just this is everywhere. Someone asks you a question, you think you have to have an answer right now. What you learn as a consultant is, let me look into that. Good question. I don't know off the top of my head. I know where to find it. I'm going to look at it and I'm going to get back to you, because then at that point, you can formulate a response that, while true, paints it in the best picture to give you the best result that you can from the IRS. So if you want to talk about where's somewhere that CPAs are underutilized, it is in representation of clients under audit. So that's one that I think someone says, I need an accountant. It's like, if someone said, I said, do you? Well, I'm getting audited. Oh yeah, you do. Absolutely. No question. And then you kind of get into stuff about when we say, what do you need? Do you need hand-holding? Do you want someone to explain everything to you? Do you need to go, are you one of those people that need to look through every line on your tax return and say, well, where's this number come from? Where's this number come from? Where's this number come from? Or do you look at it and say, that looks about right. It's about what it was last year. My income didn't change all that much. So, you know, I'm happy with that, and I'm going to move on. And those are typically two different kinds of accountants. You know, there's accountants who are happy to hold your hand and talk through all the things. And there are accountants that are like, no, I don't have time for that. You know, so that's one of the things you want to know. You also need to know how good your knowledge is. And I'll come back to this, but you need to know how savvy you are about your financial position, about your operating environment, about your regulatory environment, and those kind of things. Typically, people are pretty good about their business, but their knowledge drops off fairly precipitously as they get away from their core competencies, and that's just life. It's just kind of the way it is, but you need to know that about yourself. And then you also, again, the more you need, like I talked about before, the more you're likely going to need a larger firm. If your bank starts throwing around words like compilation and review, and we know what that is now, we can say, okay, well, I don't know if my accountant's going to be able to handle that. He didn't seem to, he mostly does taxes. And that's at a point you might say, well, I need to find another accountant. But understand, because you need a review doesn't mean you have to transfer over your tax work, right? We had this very, very large car dealership, and the only thing that we did for him was a LIFO calculation. Now what that is car dealerships, for whatever reason the IRS came up with, are required to carry inventory under a last in, first out method. And when you do that, you have to have these huge LIFO calculations that roll forward. And so we would do just that for this one dealership. Well, it's a fleet of dealerships. Deloitte and Touche did the audit and their tax work. They just farmed out the LIFO calculation out to us, and specifically out to me, because it's a drag and they didn't want to do it. So they hired us to do it, and Hoffman's doing it, and Moss Adams told me to do it. You know, what is the accountant's outlook? Ask them. What's your outlook on business? What's your outlook on life? What's your outlook on the IRS? What's your outlook on regulatory industry, regulatory things? And you will be surprised, I think. I won't get too far off here, but you know, accounting is typically a fairly conservative industry, and not conservative in any kind of political way, conservative in that we kind of do things the way they were done in the past. And that's what I mean by conservative in this instance. It's not a real progressive looking for flashy new ways to do things, right? And so you want to ask your accountant, what's your outlook? You know, what do you think about gray areas? What do you think about black and white? A lot of accountants that I've met consider themselves either to themselves or just kind of in general, I don't know if they'd admit this, that they are collection agencies for the IRS. It's their job to make sure that you're paying your fair share. And in my mind, that's not the job of the person I pay to do a job for me. The person I pay to do a job for me, a tax return, a financial statement, those kind of things, is to do the work that I hired them to do. So that's something to understand about your accountant, is where is their mindset? And I talked about earlier a little bit, different goals. We have different goals. Accountants have very different goals from business owners. Their goal is to pump out an accurate tax return or an accurate financial statement. Your goal is to run your business or run your life or whatever it is in a way that makes it so that it goes kind of smooth. You know, that's the whole name of the game, is how do we make life run smoothly, and money is part of life. So how do we make money run smoothly? So that kind of gets to that. So then we kind of come by, and I've talked about this a little bit, is do you need a CPA? And we talked about if you need a tax return, most people who prepare taxes are CPAs, but they offer different services. But if what you need is simply a tax return and you're a fairly simple financial position, an H&R Block will do fine for you. A paraprofessional will do fine for you. Paraprofessional is some loaded word. It's kind of like that, almost professional, right? But that's not what it means. It means someone who knows the work. I've met paraprofessionals that are better than a lot of accountants. They know the work, they know the industry, they know the financial positions and all those kind of things. They just haven't passed the test. They haven't taken the test. They haven't taken the credit hours to be able to pass the test. Enrolled agents are typically very good tax preparers, right? Enrolled agents is something through the state, and it's all through the state. The states kind of cover the boards of accountancy, but enrolled agents are one that they're enrolled with the IRS to prepare tax returns. And they're usually very good at it. I worked with one at WWC. He's still there, and he's an enrolled agent. Probably one of the better tax preparers I've met. Now, you probably wouldn't hire him to do like high level, to do like consulting on a business, but that's not what he does. So those things to keep in mind as we're going forward there. And again, if what you need is a tax return and some business work, you don't need firms that do attestation services, because all it's going to do is cost you more money. Now, I will say that some of the best tax people are probably at those bigger firms, because those bigger firms also pay very well. They charge big fees, they pay big wages, great benefits, and it's these big kind of boiler room kind of places. But if you don't need that kind of work, there's no reason to pay that kind of money, right? I never saw a tax return get out of Moss Adams for less than $2,000. I don't care who it was. You try to do a tax return through Moss Adams, it's going to cost you a minimum of that, just because so many people have to touch it. All right. So much for that. I've kind of I'm looking at this just a little bit because I've kind of combined a few areas since the last time I did this, so my notes are a little wonky, but the key is that you need to have an understanding of the type of work that you need and the type of work that the accountant that you're talking to is able to provide. And the only way you can do that is with a conversation. And so that knowing your needs, knowing what it is you're looking for, and then also knowing what the accountant, what their outlook might be, is going to help you. I'm going to touch on that later with the different kind of things that can pop up between an accountant and their clients. Actually, before I moved on, I did want to touch on one more thing. I did talk about specialization, and that's a big key here, because as we look at these different accounting firms, you're just by nature going to get location, those kind of things. You're going to get firms that funnel into specialization areas, and there's industries that are more apt for specialization than others. By specialization, I mean like construction is a big one. Construction on any size, you have to have what's called the percentage of completion look back. When you have multi-year projects and you're estimating how far done you are, you have to go back and retread that and do it, and take some specialized knowledge. Not-for-profit industry, highly specialized, right? Manufacturing distribution has some very, very specialized areas about it. Oil and gas, big spend. We don't see it out here, but in the Midwest, or Oklahoma, Texas, oil and gas is huge, right? So Amspacher, he had a bunch of these oil and gas clients. I can do anything with a lot of percentage of depletion, they call it, on these oil and gas activities. If you don't need those specializations, you have no reason to go to a firm that specializes, because all it's going to do is cost you, because you're going to pay for their specialization whether you need it or not. So that's something to consider, is, do I need something that specializes? And if you buy a widget from a wholesaler and you sell that widget to the public, that's all you do. You don't add value to that widget. You don't do anything. So let's call that widget a sweatshirt. And you buy a bunch of sweatshirts and you turn around and sell them to the public. You are pretty much identical to every other person who sells sweatshirts, who sells widgets, right? Because that's what it is. You're a retail business, and you don't need someone that specializes in retail businesses, because all retail businesses are roughly the same. And that's something that clients don't like to hear, but it is true. Your business, regardless of how much it's your baby, it's really not that much different than everybody else's business in that, especially in that industry, that they also consider their baby. And something to keep in mind when you talk to your accountant and you say, well, you don't know this about me, and you don't know this about my business, you don't know this about this. And by and large, they don't need to know, right? They don't need to know, because what they need to know is what you buy it for, what you sell it for. That's what matters to accountants. How much did you spend? How much did you make? So keep that in mind. So now I'm gonna switch about an hour there. We're doing all right, I guess. We got about I wanted to talk a little bit more, something that is really near and dear to my heart. And this is an accountant as a member of a larger professional services team, right? One of the best ways that you can protect yourself as a business owner, as a person in a regulatory environment, is having a team of professionals to work with you. And I have there's this great quote I heard, and it's by Niccolo Machiavelli, and he was a Renaissance political philosopher, and he gets a bad rap because he's kind of synonymous with Machiavelli, and is kind of, means justify the end, everything for yourself, and sort of that goodness be damned kind of thing. But one of the things you also understand, Machiavelli was working in an environment that was very cutthroat. This is Italy of the 1500s with the Medici and bankers and that kind of stuff. It was very much that kind of kill or be killed kind of environment. And what he said was, people failed because in the good times, they never thought things would change. It is a common defect in people not to make any provision in the calm against the tempest, right? We get lulled in these habits that this too shall not pass. It's going to be like this forever, right? And so we don't, when things are riding high and we're feeling good and everything's going great, maybe how it felt November of 2019, right? That it's not going to change, but it always changes. This too shall pass, the good and the bad, right? So in expecting things to change and having yourself in a defensive position to be able to roll with these punches and be able to make the best moves that you can when these things come up is important. So who's part of your professional services team? An accountant, absolutely. That's your financial person. It's your financial person, right? So they're one that you want on your team. Another one is an attorney. You have to have a good attorney, even if I'm not sued. That doesn't matter. You still need someone who knows the laws of the regulatory industry in which you operate, understands your business, understands you well enough to know, well, I know North Jetty is kind of thinking this direction and this has popped up. I'm going to give them a heads up about it, right? This is how you leverage people who have more knowledge than you, right? Doesn't make them better, doesn't make them smarter. It means they have applied themselves in an area of life different than you have. And typically in small businesses, people don't go into business doing construction, making beer, because they want to learn the law or because they want to figure out the accounting equation, right? They do it because they want to be in construction, they want to make beer. And it just happens that they have to know all this other stuff because that's the way business works. Insurance, have to have a good insurance agent. Things change. Hey, I'm thinking about a second location. I'm thinking about doing this. My wife right now, opening up a yoga studio. What insurance is required by that? Unless you have a team in place where you can quickly say, I need to maybe have some insurance. What's this going to cost me? And these are decisions that can be made fast, right? It might go away. You got something available today. It's not going to be available 3 days from now. And if you have to get on the phone with somebody and shop around somebody and say, hey, this thing came up and let me tell you the whole background of my business. And let me tell you I'm going for my financial position. And you try to get them up to speed, you're not going to get the best result. You're not going to get the best advice from that professional that you could get. Realtor. I always think a realtor is good to have in your back pocket because you could be looking along, driving along and there's a building for sale. Like that building would be perfect, but I don't know any realtors. So I'm going to go online and try to find out how much it costs. Or if you know a realtor, you say, hey, Give me the lowdown on this. What's the story about this? Is there any problems? You know, where are they at? Realtor's a great one. Banker, key. You have to have a good banker. You have to know your banker. Your banker has to know you. And again, I'm talking about business here. When we talk about individual tax returns, individual banking, yeah, you probably want to have a banker, you know, so if something goes wrong on your statement, you can go and ask him. But I'm talking about business. You have to have a banker. November 2019, everything's rolling along great, right? March 15th, well, it started hearing rumblings of it in January and February. Oh, there's this new disease in China. It's getting some traction. It's starting to worry some people. And all of a sudden, March 15th, boom, we're shutting everything down, right? You can't be open. How am I going to pay my bills? No, but you can't be open. And that was where we found ourselves on March 15th of 2020, is everything shut down. No one knows when it's going to open back up, and no one knows what's going to happen. And you have all these employees looking at you and say, hey, I got a bill due. I got to pay my rent. I got to feed my kids. What am I going to do? I don't know. Now, if you have a banker, you can call them and say, how do we get out in front of this? If you have an attorney, if you have people who know these things and can help you. Insurance, can I do anything? No, pandemic, can't do anything. Okay, banker, can I do anything? Any loans I can take? Yeah, you know, you got some leverage points here on these buildings, those can help you out. That is where you get value. That is where you get value when the times change and things get tough, and you need the opinions of people who know more than you. And the only way they can help you is if they know you, and they know your business, and they know your values, and they know your future wants and your needs and your desires and all these things. The other key thing about a professional services team is they know who the good accountants are, right? Attorneys work with accountants all the time. Insurance agents work with accountants all the time. And if you go, I need an accountant, they're going to say, hey, I got 3 names for you. These people are fantastic. You go with any one of them and you will be happy. Right? And especially if your attorney knows that you need hand holding, knows that you're always kind of nervous and sort of wondering what's going to happen, and you say, hey, this accountant's going to make you cry. This one's going to really do well for you. All right. They're the one that's going to help you out. So your professional service team will help you find a good accountant. Similarly, you as the public, you as a business owner, you as the person kind of bebopping through life running your company, likely can't tell the difference between good accounting work and bad accounting work, right? You can't look at it based on what they did and say, man, that's a really good looking tax return. That's a really good looking financial statement. I mean, you can, maybe they bind it up nice and it's spiral bound and it's got a cardboard cover sheet and all these kind of things, and you think it looks nice, and maybe it does. That doesn't mean it's quality work. That means it's presented in a nice way. Something to consider then, again, is who knows what quality work is. Accountants know, or attorneys know what quality accounting work looks like. Bankers know what quality accounting work looks like. So they can help you when you're looking at how do I hire a new professional. And I talked about how they can help you deal with things quickly. And when it's time to deal with things quickly, again, I come back to the COVID because, you know, when I look back over the things that have happened in my career, the big things is 2001, the dot-com flame out, and that hurt. You know, that was a pinch. We had the Great Recession of 2008, and that one what was big, but never, certainly in my lifetime, and if you're going to believe everybody who talks, not in many people alive lifetime, has something happened like COVID-19 that threw not just our nation, but the world into this entirety of disarray, right? With no idea when we're coming out of it, no idea where everybody was flying by. I guarantee you there was nobody that was ready for that on any level that would make it so that, oh yeah, COVID-19, nothing. I just kept on waltzing in life. You know, unless you're retired and all your money's under your bed or something like that, then probably you're okay. But if you're a working stiff, or if you're someone who's paying employees and you've got, you know, you're responsible for other people's livelihoods, it's going to cause you some stress, and you don't want your professional services team trying to get up to speed on who you are and how your business operates at those times. You want them to know you, they know you know them, and you guys can get down to business and get the thing done. It requires work on your part. And this is something that is key, and something I'm going to go on a little bit more, is that it requires work on a client's part. This is not just, I drop my stuff out of my account and they give me something back. You have to invest time to understand your business, to understand your regulatory environment, and to understand the proclivities of your financial services team so that you can work together and work quickly and work efficiently when things happen, right? And you also want them to be on board. You want them to be excited about you and say, man, I love these people. I want to see them do well. I'm going to give them a little bit of extra help because I know them and I know what this means to them. And that can't happen if you don't have this team in place, right? All right, so much for that. That's what I hope you take away from that, is that if you don't have these professional services team members, I advise you to cultivate those relationships. It doesn't take money. It takes a few words, it takes time, take a couple emails, maybe a lunch. Everybody's got to eat lunch, right? Eat lunch with your accountant, eat lunch with your attorney. Make sure they're not going to charge you. I come across that later. You need to know when you're being charged. But if you can, get to know these people, because they are people. They are people. They're an attorney second. Usually they're a person first, right? And the more that you can sell them on your dream and your vision for your business, the more they're going to be on board with it and want to help you achieve those dreams. So with accountants, like every other person, you have different outlooks. You know, we talked about they're not always tax preparers. They're not always auditors. There's some accountants who do nothing but financial planning. There's some accountants who do nothing but consulting. There's some accountants who do nothing but estate and gift tax work, because estate and gift tax is very complex, right? And there's always this joke about IRS auditors, IRS agents and Department of Revenue agents are, you know, maybe not the highest in their class when they're graduating. You know, those people went to KPMG and the big accounting firms that are offering the big benefits. The estate and gift tax auditors at the Department of Revenue, the IRS, they know exactly what they're doing. They know exactly what they're doing. They are very good at it, and they will take you apart if you don't have a good estate and tax gift person. So if you know that you have estate and tax issues, hopefully you already have this team in place, but if you don't, get it in place. So when we talked about different outlooks on them, are they aggressive? Are they timid? Right? Are they going to take positions that you want them to take? Because there's black and there's white, right? No accountant worth their salt is going to take a absolute black position, a no-go, don't even think about it position, right? Because you can lose your license. Those things, those penalties that should be on the client, those get transferred over to you. Fiduciary liability. The white ones are easy. Everybody should know them. No, you take everything you can. It's that you pay the least possible legal tax based on your position. But then there's a gray area, big gray area in accounting. People think there isn't, but there is. There's huge gray areas, right? Will they walk that gray path with you? And again, this comes back to, are they a collection agency for the IRS, or they work for you? Are they a valued member of your team? I remember when I was working at Moss Adams, I was a tax manager, and I would have staff come, straight out of school, and they're trying to do their thing, and they'll come, hey, I just found out this client's doing this wrong, this client's doing this wrong, they're taking this deduction. Like, that's great, that you found, more money for the IRS. We're costing our client deductions, and we're finding things that aren't going to help them in their business. So go back to your desk and find a couple ways that we can save them some money since you did this, and that's the key. And I want to tell you that accountants are not on your side, but a lot of them view themselves as collection agencies for the IRS. And you need to know if the person you're talking to is one of them, because they may not take the best or at least the most aggressive positions, because you can take an aggressive position, right? You can take an aggressive position. One of the ones I like to ask, one example I like to give is capitalization policy. The IRS, Congress, is absolutely silent on capitalization policies. They say if you have a piece of equipment that you buy and it's going to utilize in your business longer than a year, you are required to capitalize it, which means put it on the balance sheet as an asset and depreciate it over some prescribed amount of time, right? Typically 5 to 7 years. for equipment and furniture and that kind of thing. And you're gonna say, well, I bought this music stand, it cost me $20, $50, whatever the music stand costs. Right? So, okay, I'm gonna use it for 10 years. So does that mean that I'm gonna take, $5 a year and depreciate that? And that's where capitalization policies come in. And most people say, if anything under 250, I'm not going to capitalize it, I'm going to expense it today. Anything under 500, I'm not going to capitalize it, I'm going to expense it today. Right? Anything under 1,000, I'm not going to capitalize it, I'm going to expense it today. Now we're starting to get into a little bit of a little bit more what I call an aggressive position. And it's fine to have an aggressive position, because in an aggressive position, if you get audited, and if they throw out that expense, what you're going to do is you're going to pay the tax you would have paid anyway, plus some little tiny bit of interest on top of it. And interest rates are fairly low governmentally. So my mind was always, you're probably good to take an aggressive position, remembering that old adage that we always use, that pigs get fat, hogs get slaughtered, is that you don't want to go so far that you're just begging the IRS to audit you. But taking an aggressive position, there's nothing wrong with that as long as you can stomach the potential downside. And the big takeaway here, I want you all to know that if you over-report expenses, you take more expenses than you are legally allowed to take for whatever reason, they're just going to hit you with a little bit of interest. Maybe some penalties if it's egregious enough, right? That's it. If you underreport revenue, and you see it all over, I see it here on this, I see it here, we only take cash only business, right? And it's not because they have some nostalgic notion about the good old days when everybody carried big wads of greenbacks and these kind of things and slapped them down. It's because they're trying to avoid tax, and everybody knows it. That's tax fraud. Right? One is making a mistake and taking too much in expenses, and you could say, well, I just didn't know that. Underreporting revenue is always tax fraud. Always. Period. End of discussion. Not worth talking about anymore. It is tax fraud, and the IRS will do whatever you think they do to people who commit tax fraud. All right. So much for that. Are they detail oriented? Okay. Are they detail oriented? Are they like, I want to be down in the numbers and I'm looking at this number, I'm looking at this number and all this kind of thing. And well, okay, depreciation is this much and it changed this percentage. Or are they got a 50,000 foot view and they're looking down saying, yeah, this is pretty reasonable. A little bit different here. And they're looking at it from that's how I was. I've always been a 50,000 foot view person because that's the way I was taught in the accounting firms I worked for, is that if you're looking at the trees, you can't see the trends. You can't see what's really going on if you're so down in these details that you're focusing on that. So you have to have that. And the problem, and I've talked about this, I haven't talked about it last time, so now I'm going to talk about it again. And I'm going to get to this too. I got to pick up my pace here a little bit. But if you're bringing in a shoebox full of receipts and saying to your accountant, hey, here's my accounting, this shoebox full of receipts. Now your accountant, aside from hating you, has to take all these receipts and enter them into some usable way, enter them into an accounting program and then try to generate financial statements. So they're doing the work that should have already been done rather than looking at these financial results in a way that might be meaningful to you, to give you some advice about this is what I'm seeing on your trends. This is what I'm seeing. I'm seeing your revenue go down. I'm seeing your expenses come up. You're getting that profit squeeze, right? How do we fix that? Knowing that you can't grow a business by cutting expenses. And you can save some money, but you can't grow cutting expenses. You have to raise revenue, right? If your accountant's spending all their time entering your data because you're unable or unwilling to do it for yourself, then you're missing out on some of the reason that you hired them in the first place. So, are they creative? Are they bringing you ideas? Are they saying, hey, this came across my desk. The IRS just came out with this memorandum. They're saying, hey, take advantage of this, R&D credit, something like that. Are they giving you ideas, or are they just kind of saying, oh, this is the way we've done it, this is the way we've done it, this is the way we've done it, and they're just kind of marching along and keep on doing the same thing. So they're not creative, they're a technician. They just kind of, they enter in the work and they do it well, but it might not be bringing you the kind of results, it might not bringing you the kind of ideas that you might be hoping from an accountant. So again, another thing to talk to them about. Hey, what's your point of view on all this new stuff? Are you up? Do you subscribe to all these services that bring out that there's all these, services that are designed to tell you when these new things come down? Hey, here's some new case law that only applies to look back interest, these kind of things. I said this before, so this creative versus technician, I do have a quick story about this I just love, is the first firm I worked for, Hoffman, Stewart & Schmidt. One of the first persons I met when I worked there was a guy who's 2 years older than me. His name was Shane. And Shane went to U of O. And Shane was great. Shane, he took me golfing. He was only, he was 25, 26, but I was 23. So, and he'd been in accounting world for 3 years. To me, he was like, oh, this great guy. Good accountant, great accountant. He's now a partner at Hoffman, Stewart & Schmidt. And I ran into him at a training when I was at Moss Adams. And, so at that time, we're both in our early 30s. We've been in the business about, 10 years. And he was raving about this new staff that they had. I got this new guy. This guy is fantastic. He can get into anything. He can dig anything out of books. He researches amazing. He knows all the laws. He knows all this stuff. And he introduced me to him. Yeah, I could see him. And then we went to lunch. And I'm looking at this guy he was talking about, and he was probably, 25 or so. And he's like, his shirt's untucked, he's got stains all over it, he's eating with his hands, his hair's all messed up, he's got food on his forehead. And I kind of looked at Shane and cocked my head. He's like, well, we don't take him to clients with us. More of a backroom kind of guy. So in this accounting profession, you have people. And anybody who's done consulting, this, if you have any kind of firm, you have the people that will get you the right answer every single time, will get it quickly and efficiently, but God help you if you let them talk to a client, right? You don't ever want them in front of people because they are not people person. They don't bring this sort of professional decorum and gravitas that you want from an accountant, but they're great technicians. So that's something you'll see in smaller firms. Or in bigger firms, you'll see these people you don't necessarily want in front of clients. But I did like that story because it shows that there are different types of accountants that way. You do need to know what they're going to charge you. And that's a fair question. My kind of rule was always, if you call me and you say, hey, I've got this question. And if I either knew it off the top of my head, or I knew a partner who knew it, or somebody else in the firm who knew it, or I knew exactly where to look it up. Some really easy question. I said, I'm not going to charge you. I'll just email you the answer or call you back or whatever. Now, if I had to research it, if I had to look it up and I knew it was going to take some time and it was a question, I actually had to open a spreadsheet or, kind of get into a discussion with someone, then I'm going to say, I'm probably going to charge you. I'm going to have to charge you something for it. You need to know, you want to know their billing rates, right? So in 2007, Moss Adams billed me out, I think, at $175 an hour, right? So if I'm going to work on your stuff and we work in quarter-hour increments, the less it's going to cost, the least amount it's going to cost you is ever a quarter of 175. So keep that in mind. But they should tell you. You shouldn't have any surprises that way. And finally, when I was talking about the different outlooks from an accountant, I want you to understand again, and I've said this a lot of times, but I really want this to hit home. Accounting is a backward-looking profession. It's a profession concerned with the historical results of your business, right? For reporting purposes of paying taxes, reporting to government, or just how you spent their money if you're a nonprofit, or to convince the bank that you are worthy of that $1 million line of credit they're going to give you. This is what accountants historically and traditionally are concerned with, is this backward-looking historical financial information. And if you want someone to be forward-looking and you want a consultant and you want someone with all these great ideas about how to improve your business, you not only need to let them know that, you need to make sure that they are capable of doing that. Because they're not all the same. Accountants are not all the same. Very, very different kind of outlooks and just like everybody else. So why do people look for new accountants, right? I can tell you there was a study came out. It was pretty, well, I was pretty new to the industry. A study came around and it was something that really kind of made a big splash in all the journals. And you know, there's of course Journal of Accountancy. This is about as exciting as it sounds. But in these journals and things, there are information that comes out. And one of the things they did is they did a study on why people change accountants, why people change professional services. And what they found was the number one reason by far was something called perceived indifference, right? It is my accountant doesn't care about my work. My accountant doesn't care about me personally. My accountant doesn't care about my business. My accountant doesn't care about everything that I care about. Perceived indifference. They don't think the accountant cares. Accountant may care a lot. Accountant just has no reason to contact, right? Accountants are not mind readers. If you need something from them, you need to reach out and say, this is my concern. This is where I need to go. Because again, because it's historic and backward looking, we have this thing, you know, we look at trends. We look at how do trends continue and how do trend lines keep walking. But we also know that historical performance does not guarantee future results. We can't rely on what we call this inductive principle, induced to believe something simply because it's happened in the past. So that's something to really think about is if you want a consultant, you need to know that you need a consultant and you need to let your accountant know that and ask them how they can help. Squeaky wheel does get the grease in the accounting world. If you have questions, you need to reach out. If you see something that it seems to you might impact your business, you need to ask them. Now, it might cost you a little bit, especially if it's something like, our Brewers Guild, there was a text went around today. Someone was looking at an R&D credit. You get research and development credits in manufacturing. If an accountant's going to do a study to say, can you be benefited by research and development credits? That's a lot of work. That's a lot of work. That's not just off the top of your head. Yeah, maybe so. You got to actually look at it because it's not as cut and dried as it sounds. So that's something too. If you need that, it's something you need to ask about, but be prepared to perhaps pay for it. Ideally, so that's the biggest reason, you know, cost, I don't know, third or fourth was the reason. Part of it was just another big reason, and probably the reason that people are, what I would guess most people would be looking at this class for, is that my situation has changed, right? I married someone and, you know, now they came with these rental properties and now they don't have an account of their own. Their family kind of done it. We're on our own. We need to figure this out. I need some help. So your situation changes, or you decide to open a business. You know, now you open a business and now you know that you need help because you have this business. So let the accountant know what you need. Let them know that you're looking for. And then, you know, the final one is your relationship with your current accountant damaged. There's some people, there's some personalities that just don't get along. You know, they're oil and water, they beat him, you know, they don't get along because they have different outlook on life, they have different personalities, they have these different things that don't get along. If you don't get along with your accountant, get a new accountant. Don't try to nurture along these relationships because frankly, it's not that close of a relationship. These aren't people, maybe it is. I've had some clients that, you know, are definitely friends and whatnot, but the vast majority of them, you know, probably not going to come to your daughter's wedding. So keep the relationship with your accountant in its proper perspective and in the box that it needs to kind of stay in to get the best out of it. So this is one too. What should your accountant expect from you? Because again, I've tried to stress that this is a partnership, right? Talking about the different expectations of what are we looking at? Are we looking at historic numbers? Are we looking at consulting, forward-looking numbers? Those kind of things is that you need to be understanding. In order to do that, you need to understand your business. You need to know what's your business structure, what's your operating entity. Are you an LLC? Are you a sole proprietor? An S corp? You're a C corporation? Are you an LLC taxed as an S corporation? All these things come into play and have various reasons for doing them that way. Be conversant about your financial position, your debt. What's your debt load? What's your debt ratio? Where do you have leverage on property if you need to take on more debt? What are your assets? Where are your weakness points? What does the next 12 months of your operating environment look at? What are the trends in your industry? These are things you need to know, not just for running your business, but for your financial position as well. You need to understand account. If you are in business, you need to have some basic understanding of accounting. You need to understand that assets equals liabilities plus shareholders' equity. That's the accounting equation. Your assets, and it makes perfect sense if you think about it a different way. If assets equals liabilities plus shareholders' equity, then shareholder equity equals assets minus liabilities, and that just makes sense, right? I've got $500, I owe someone $300, that means my net worth is $200. Absolute sense, but you need to understand it. Maybe have an idea about double entry bookkeeping. We mentioned, Machiavelli. This is where double entry bookkeeping, which all accounting is based on today, came from. It came from the Italian bankers, the Medicis, these kind of people who were starting up the banking industry in Renaissance Italy. And what they found was this double entry system worked great, right? You got debits, which increase expenses, right? Debits are expenses, and they increase, got myself sideways here. So basically, let's say this. If we're going to increase cash, we need to debit cash. If we're going to decrease cash, we need to credit cash. So every entry is going to have, so let's say I sold something for $500, you give me $500 cash. Credits increase income, right? So we're going to debit cash for $500 to increase cash, and we're going to debit revenue. We're going to credit revenue for $500 to increase revenue. That's double entry bookkeeping. We have two entries that balance for every single entry. And you need to have some idea about how this double entry bookkeeping works, because that's what runs underneath. Like something like QuickBooks, it does all this stuff in the background. But when push comes to shove, and you got to figure out where something goes wrong, you need to have an understanding of the way bookkeeping works, right? And this is just an aside. If you're on QuickBooks, and if you have an account called opening balance equity, right, and it's got a number in there, you need to address that. That's a dummy account that QuickBooks sets up and dumps in stuff that you messed up somehow. So if you have that account, I would say to take a look at it. And that might be a need for an accountant who understands that kind of stuff. We talked about understanding the financial regulatory future potential. You have to speak the language a little bit to be able to communicate, right? You can't have zero concept of financial position and balance sheets and income statements. Even something as easy as a balance sheet is a snapshot of a business's financial position at a single point in time, where an income statement, also called profit and loss, or an operating statement, is the results of a business operations over a period of time, right? Two big concepts, the two main financial statements: balance sheet, statement of income, profit and loss, right? Those are things that are good to know, or I would even say necessary to know in order to run your business effectively. Because when everything's going good, you make money in spite of not knowing this stuff. But when things, kind of get a little bit tougher, you need to be on the ball and be able to do these things. Understand the pressures of tax season, right? This is when I talked about 70-hour work weeks. This is a brutal time of year for accountants. Accountants between January and April 15th are going full bore. I used to take Sunday afternoon off, and that felt to me like a pretty good break. So be cognizant of what the time of year is. And if you have some kind of just sort of theoretical question about some property you might be thinking about buying and how might that look, March 27th is the wrong time to ask your accountant that question, because likely it'll get yelled at and then hung up on. Because again, this is every single tax return is trying to get filed by that time. And this is a hugely stressful time to be working with it. There's some people who, I remember Amspacher told this story of April 15th, and this person shows up at his office and asks him when I should bring my W-2s by so you can file me an extension. You know, these are things where if you're going to get an extension, you need to do this beforehand. Make yourself someone your accountant wants to work with. Help them help you by understanding their time constraints and working with them. Be prepared for meetings when you arrive. Key. If you know you got a meeting with an accountant, you're talking about taxes, financial position, whatever, make sure that you are ready to talk about it and that you understand what the key is. March 27th is also not the time, if you're dropping off your stuff and you're having it, to start going on these big discussions about, you know, the softball team and what the politics is looking like these days. Keep it to the conversation at hand so that your accountant can get back to what they need to be doing. I talked about the shoebox full of receipts, and the thing about this, and I've seen it myself, and the thing about this is that, like people who sleep poorly, people who don't know anything about accounting are usually very proud of the fact. I'm going to tell you, I don't know anything about accounting. And if you're in business, it's not funny. It's not amusing. It is disruptive to the accountant's day trying to get work done, and he's not going to be able to help you. They're not going to be able to help you at all. So are you capable? Are you savvy? Do you understand your financial position? Can you hold you don't have to be an accountant. You don't have to be a CPA, but you need to have some understanding of the numbers that underlie the results of your business. Because bad inputs lead to bad outputs. And again, if you just get a stack of receipts, and this is from Amazon and there's a number on it, and I don't know what this is, so I'm going to call it an operating supply. And all of a sudden, every single expense you have is an operating supply. So you have one number that says, there's my income, there's my operating supplies, there's my net income. Tells you nothing. Can't help you run your business. So if that's the way you're running it, I suggest that you make a commitment to yourself and to all the financial professionals of the world, and financing at large, and try to improve upon that. Because you also can't see trends, you can't see big picture, you can't see anything. You're flying by the seat of your pants, and eventually it will come back and it will sting you and it will hurt. Discussions are good, arguments are not, right? What you don't know, you should also not think that you know. So one of the greatest examples I have about this is car advertising. I can't even think of the number of clients. I'm trying to come up with some large number. It's a large number. Well, come in and say, hey, I've got this car. I started off this business. Here's what I did. I had decals made with my business on it. It's got my phone number. It's got my website. Really nice looking. I slap them on my car. So when I drive down the road now, everything is advertising. I want to take this federal mileage rate, 61 cents, whatever it is. And every single mile I drive should be deductible as advertising. And then when you say, no, that's not how it works. Well, yeah, no, but it is because I'm driving. It's like, no, it's not. The IRS has said it's not. The courts have said it's not. Congress has said it's not. You cannot do that. And there's always these people that want to argue with you about it. They want to say, well, and what it always comes down to is they think it should be allowable. And we all know the government doesn't care what you think. The IRS doesn't care what you think. What they say is this is the way it is. And all you're going to do is cause headaches for yourself and headaches for your accountant. When you know that it's something that is a black and white issue, and there's no reason to discuss it, it's not worth discussing, then try to accept that, and try to accept that maybe they know better than you about what is allowable and was not allowable, and take that. And if you say, well, I know that I got a friend and they've got an accountant and they do that, it's like, well, then go to their accountant, because I'm not going to do that. And no firm that I ever worked for will do that, because it's absolutely, because we have pride. We have a work product that we're putting out. We have an oath we've taken to do all these things, to get licensed and everything, to do things correctly and to not take positions that are patently false. And a good accountant, and that's just an example, but it's an example of a good accountant won't do it. And the more you argue about it, the more they're going to kind of question whether they want to keep working with you, because it brings your ethics and your ability to compromise into question there a little bit. They're the professionals, especially regarding taxation, for the Financial Accountant Standings Board, IRS promulgations, tax law. We go through a lot of training on tax law. We have books and volumes and software that tell us exactly on every issue, can drill down through these different tax laws and codes and generally accepted accounting principles to find the answer. All right. So anybody who holds himself out as a financial professional, especially if they have letters like CPA after their name, they know the answer. They know the answer. So listen to them when they tell you the answer. And then I said this one last time, I always get a kick out of this. There's a philosopher named Arthur Schopenhauer, and his philosophy was fairly gloomy. But one thing that he said that I think, and I think anybody who's ever done consulting will understand this, and I think everybody in real life understands this. And what Schopenhauer said was, if you really want to know your true feelings about somebody and your true thoughts on a person, observe your reaction when you receive an unexpected communication from them, right? And so what I mean by this, I mean, it's 2 o'clock on a Friday afternoon and my phone rings, right? And the person answering the phone up front says, hey, I've got so-and-so on the line for you, right? And I say, oh, I love so-and-so. They've always got interesting questions, and they take information well, and they're always kind of prepared. And I'm happy to talk to them, but put them through it. And then they call and they say, oh, hey, I got a call for you. So-and-so's online. And you're saying, absolutely not. Not on a Friday afternoon am I going to waste my time talking to so-and-so, because it's going to annoy me. They're not going to listen. They're going to want to argue. And it's always a hassle to talk to them, right? And so you know that, and you can probably think about someone in your life, and you think, if all of a sudden the phone rang and I looked at it and I saw that, and then you're like, I don't think so. That's what he's getting at here. And the last thing you want to be to your accountant or any professional services is in that category when they're like, I don't think so. You want to be someone that they want to talk to, somebody that they want to help, someone that they want to bring along, because you've shown that you are worth bringing along to them, right? You don't. And the other thing is, accountants do fire people. Accountants do slap that ruler on their client list and say everybody above this mark is gone. And is that mark just cost? Absolutely not. It's that 80-20 rule. 20% of the 20% of the people charge 80% of the problem. So what do? You get rid of that 20%. And if you're one of those 20%, I don't care how much you pay. I don't care how great your business is and what a good, I do accounting work for XYZ Corp and how great that is at parties to throw on people. They're going to fire you because it's not worth it. Life is too short to deal with that, even in a business sense. So, final thoughts. Different types of CPA firms. What's right for you? That's one thing to remember. Do you need a big firm? Do you need a little firm? Do you need a single office? Do you need someone who just really knows taxes well? Or do you need a compilation? Suddenly your bank says, hey, your loans have gotten big enough. We need to have you do a review for us. So now you need to do a review. And with technology is the way it is now, it doesn't necessarily need to be in your own town. It can be someone in Vancouver, someone in Portland, someone in Aberdeen, someone in Seattle. So think about that. You're not limited to the geographic region in which you operate, especially today with technology being how it is and how everybody's good at Zoom now and all those kind of things. Professional services team, have one. Have one, please. If you are in business, put together a professional services team. At North Jetty, I have an accountant I could call this afternoon who knows me and knows our business very well. I have a banker I can call. I have a realtor I can call. I have an insurance agent I can call. All these things, because they have to be there in order for you to operate in a way that gives you the best chance of success. And that's what it is, right? That's why we work. We're trying to increase our chances of success so that we can do what we want to do in our life that makes us happy. Be a good client. Speak the language. Take responsibility for understanding your financial position, your regulatory environment that you operate in, and how your books work. It's going to be an aid to your success. Anything you can do to have input in this discussion, so your accountant's not just lecturing you on how your financial position is, that will bring benefit to you in your business. Finally, is the one thing I talked about is an exit strategy. Accountants can't help with exit strategies. And it's one thing as an accountant I used to love. I loved working on exit strategies because that's where you get to actually sort of, I don't know, flex your knowledge. That's where you say, I've worked with hundreds of different businesses and hundreds of different industries, and this is what works and this is what doesn't. Because at the end of the day, they're really not all that different. You know, you're selling something, you're charging money for it, you got to pay something to make it or buy it. And then at the end of the day, there's money left over. That's what it is. Exit strategies are great because people create jobs for themselves. They're great at construction. So you start doing construction. You work in the business. That's what you're doing. You're doing construction. Well, 20 years later, who's going to take that over? You've built this business, it's worth something. You look around and you say, all I have is GoBots who do what I tell them to do. I have no one who I can actually say, let's talk about you getting some ownership. Let's talk about transitioning. Or if you have kids that you're thinking about transitioning into, are they in the business? They understand the business, they want it. These are things you have to think about because it's a 5 to 10 year process to get out of a business of any size. This transition takes a while. You have to identify the people. You have to figure out how you get them ownership. You have to figure out how you step out of it. And this is important. And finally, if you want to survive downturns, if you want to survive COVID-19, if you want to survive this last winter, you have to put yourself in a defensive position. You have to understand these things. You have to always be expecting that things are going to change. You have to have a handle on your business to be able to do that. And to do that, you have to make this commitment to understanding these things. That's my time. I surely do appreciate you listening and being attentive and being along this journey. If there's any questions that I can answer now, I'm happy to take them. I'm happy to answer questions. We have 10 or so minutes left. Anything that you want to know, please feel free. Yes, no, maybe. All right, well, hey, again, my name is Erik Svendsen. If you ever happen to be in Seaview, Washington on the Long Beach Peninsula, please stop by North Jetty, look us up and have a beer. And if you want to talk about accounting them, I'm always happy to talk about accounting. It actually is a passion of mine, even though it's hard to fathom. So thank you very much.